Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity you have, your attention. We promise to do our very best to give you a return on it. All right, we got a lot of updates here. We're pretty aggressive, especially with gold and silver. And we go over what happened with the tragedy with SSR mining. All right, starting out as always with the S&P 500. So essentially flat for the week. I think it closed up or down a fraction of a percent, but very volatile, as you can see. Massive selling on Tuesday, and then it shot right back up, almost giving us a textbook double top there. With a reversal bar to the downside on Friday. So our bias is that it's either going to go flat or slightly down for the first few days next week. All the technicals are super stretched here, but it seems like we're getting some generalist FOMO buying, which would make me think that it's going to go up. But as far as the technicals are concerned, it does look like it's starting to roll over, especially with that double top. The dollar is up about 0.2%. It hit right on the 400 moving average like we're talking about, and right below it here. So the 400 moving average, think of it at like 105, and then the support down below it is around 104 or so, around the 200 moving average. Probably going to trade in that range a little bit. Our bias as far as the technicals go is to the downside, but there are some macro things here that could be moving it up. It looks like the euro is going to get slightly weaker compared to the dollar, which would mean that this DXY index is going to move to the upside. But looking at the technicals here, our bias is to the downside. Yields have been moving up, which is not, which makes the dollar stronger, and that previous chart go down. Yields are moving up. This is the 2-year. Here's the 10-year moving up. And this is the 10 minus the 2. So we haven't crossed this white line yet to get into normal times. If anything, it's getting worse, and short duration debt is paying more than long duration debt. But we still want to highlight here that 1-month treasuries have and been paying over 5%. So pretty incredible that you can keep your cash in a risk-free environment and you get 5.39% on rolling 1-month treasuries. Gold closed the week at 2024, and we want to thank Kingfisher and oxygen and carbon dioxide. So thank you guys for this. I'm going to show you what I mean here. We were able to chart a couple different charts on here. So basically this white line down here is the Fed funds rate going back about 25 years, okay? And so we can see 4 different hiking cycles right here. This one topped out at 6.5%. This was the dot-com bubble. This one over here was the great financial crisis. This one was the one that they probably never should have stopped, but they did because of COVID. And this is where we are now, 5.33%. This chart in the background is gold. You guys recognize that? And so if we look at this hiking cycle right here, they hiked, got up to 6.5%, paused for several months, and then started cutting. And look at what happened to the price of gold. This is what David was talking about last week, is if you look at these hiking cycles, we take gold there, and then when we get to the end of the hiking cycle right there, it's up almost 60%. Take this next hiking cycle, okay? So we take this one right here from there, and they start cutting, right? So they're hiking up here, pause, and then they cut. And right as they start cutting, we'll take the gold price to where it goes over here. And it did make a pop up there about 50%, and then it crashed back down. GFC, great financial crisis. Everyone remembers, especially in America, when real estate was going in the toilet, right? That was this part right here. This is when real estate was cheapest. This is when gold was most expensive. So you could literally trade your gold for houses and get a heck of a deal if you started purchasing gold down here. This yellow arrow is on November of 2008. Does anybody know the significance of that date and what it has to do with the Fed funds rate and the Federal Reserve? We will give you a hint here and then bring it in. It was QE, quantitative easing. because everyone knows what that is, right? When you put it in simple terms like that, then your average American can get it. So quantitative, according to Webster's, is measured by the quantity of something rather than the quality. So instead of having a quality dollar, we're just going to have a lot of them, and look at what gold does. We measured that move. It is well over 100%. Easing, making something easier, kicking the can down the road, but not to worry, our grandchildren will pay for it. Smiley winky face. And we know that by putting the smiley winky face in there, our grandchildren will understand 30 years from now why we put everything on a credit card, because by then they're going to be so rich, they'll be able to pay for all the debt that we've incurred. All right, so that's what this arrow is. And look at the move that gold did after this cutting, after the Fed cut rates and basically made money free for a long time. And we had an amazing move in gold, 180%. Now look at this next one, hiking cycle, cutting, right? So we'll put the same little thing here. As soon as they started hiking, gold kind of traded in this range between 1,000 and 1,200. And then we'll line it up right down here with when they started cutting, okay? And we'll look at the move that gold made after their cutting cycle, 69%, okay? We put GFC dose right here, and that's for the Spanish speakers. They'll know that that means Great Financial Crisis Part 2. So we're in this next hiking cycle here. We topped out at 5.33%. And as soon as the Fed starts cutting, they start being the Wizard of Oz and pulling the levers behind the green curtain, we will see what move we get in gold. We think that because of this cup and handle pattern, if we're just going by technicals here, then we think that this is going to iron out something like that and then off to the races. And the kindergarten way of doing this is you basically take the bottom of the cup up to the top. We get a move of $1,000. If we're at 2,000 right now, we should hit 3. We think we're probably going to hit 2,500 by the end of the year. We'll see how that works out, if it does or not. Yeah, we'll see. All right, what's going on with my charts there? There we go. All right, so as far as putting together a gold portfolio, first and foremost, I've gotten some questions on this, so we'll just handle it here in Monday Market Moves. First and foremost, you're going to want some physical gold. You're going to want, the coins, bars stored in a safe place. Once you have that out of the way, and then you want to bet on the stock market, what you can do is you can get into a fund like this, PHYS. This is the Sprott Physical Gold and Silver Trust. And basically, this is a warehouse full of pallets of gold bars, okay? And think of this as cash. It's volatile cash, but it's cash. We got in back here in 2021, so about a year later, sold half our position to buy the house that we're living in today. So gold did exactly what it was supposed to do, and it kept up with inflation during that time period. But, treat this like anything else. On pullbacks, buy it. But this is one way to get a physical position in gold that's very liquid, that you can turn into cash with a click of a mouse. This is another one, OUNZ. Okay, this is Van Eck's version of what Sprott has. Okay, same kind of thing. It's cash, it's volatile cash, but it's cash. CEF, this is gold and silver. Okay, so I think it's about a 55% play on gold, and the 45% is in silver. Sometimes that depending on the price, moves up or down, but that's basically it. This is a fund that's both gold and silver. Same kind of thing. So this is kind of the backbone of your portfolio here, just like the Sprott Physical Uranium Trust was the backbone of your uranium portfolio. Buy the commodity first, then start getting leveraged on some of the miners. There's another way you could do it. GDX, getting the major miners, right? So if you don't want to have to dial in specifically Barrick, Newmont, Agnico Eagle like that, just buy GDX. It's a fund, I think 38 or 39 gold miners, and you kind of play the beta that way. Now, I'm going to go out on the monthly here just so you can see some of the moves that this has. Now, gold during this period from 2008 up to 2011, that made a run of about, we just did it, I think it was 170, 180%. Now take a look at what these miners do, okay? Over 300%, so almost double what the metal itself did. That's the value of having these miners. Same thing with GDXJ. This is the move that we're looking for. Buy on this end of the graph, sell on this end of the graph. When GDXJ has a reversal, which we fully expect it will, then yeah, we'll take advantage of that just like we did with uranium. Franco-Nevada, still a deal. Another great way to have a backbone beta play in gold. And not only that, but this one is an amazing deal right now. This was fairly valued at 160 per share, and it lost 15% of its income. I'm sorry, 16% of its income when First Quantum got shut down. Well, 15% from 160 is, last time I checked, 135. So that's theoretically where the price should be, but it's not. It's way down here at 109. And we keep catching ticks down here at like 105, 104. So if you just put in a limit order, I'd be willing to bet that 105 will probably hit next week or the week after. The market still hasn't realized that this is a deal. So we should be up here. We're saying 125 or 130 just to be conservative, but if you do the math, it should be 135. And on top of that, that last 15%, that 25 bucks that it lost, Franco-Nevada has a very good chance of regaining that back in the next few years. So core position in our gold portfolio. And then if you want to branch out from GDX and these ones, you know, Wheaton Precious Metals, we didn't put that up here, but we believe that one should be in, and it is in ours. We just forgot to put it up. Barrick Gold had a tick last week. We got it at 14 bucks, and that was just a limit order that hit, lining up with some back support back there. Thank you, Mr. Market. We love a deal, and we got it. Newmont, another core position, right? So these are all beta plays. You're not going to get a whole lot of alpha in these, but the odds of them, your risk with these is a lot lower, okay? Newmont, we had a limit order hit at $32. We have another limit order in at 31, and then last one in at 30. Each time this goes down, we're buying more shares, okay? So the cheaper it gets, the bigger our position. Technicals are really stretched right here. I think we've just about put it in a bottom. Unless gold happens to come down, these will get drugged down with it, and hopefully our limit orders will hit. But that $30 is just lining up with some amazing back support back here. I mean, it's cheaper than it was at the COVID lows. This is, we like this one a lot. Newmont, I'm sorry, not Newmont, Agnico Eagle. Okay, had a limit order hit. We had the limit order in at 45 bucks. It hit and shot to the upside when gold did well. But I think anywhere kind of along this trend line here is where we're going to want to be making entries into this thing. I mean, this has had some amazing moves right here in Agnico Eagle. Here is another example of the miner as opposed to the metal itself. Let's see what kind of move this had from the 08 to 11 and over 300%, just like Barrick. Gold Royalty Corporation. Now this is what you just saw with all those. That's 80% of our portfolio. Okay, in gold, in the gold part. Now the rest of it is these other smaller ones, right? So Gold Royalty Corporation is a gold royalty play, but it's just starting out. It's only been around a few years. They're just now starting to get some assets coming online that are actually paying them income, whereas Franco-Nevada has been around forever, okay? This is the up and comer. We had a really nice bounce up here. I mean, it went from around 130, and we're a little bummed because we had a limit order in at 130, and it got down to 131. It did not hit, so that's kind of a bummer. We missed a huge move there. It closed the week at 172. I think there's a fund or something that picked this up, or maybe it was a subscription service. If anybody knows, put it down in the show notes why Gold Royalty Corporation just shot up so much. I think people are starting to finally see the value in Cote coming online here shortly. I don't see any purchases into this, but we're keeping our limit order at 130. Maybe we'll get lucky. We pulled the one for 120. That's probably a pipe dream at this point. Okay, another part of it is Origin Royalties. Okay, still have our limit order in here for 46. Hopefully it'll hit, but a new royalty play that's online and part of the Rick Rule Royalty and Streaming Bootcamp. We think this one will do well. And G Mining Ventures. We also have some other junior plays that we get from Jordan Royburn of the Daily Gold. And, if you want to get a little bit more out on the risk profile, and it's also a nice way to where each of these companies we study about an hour a month. And if you want to get a little bit more alpha in the sector, you can join his newsletter or one like it. And that basically gives you access to a professional that studies these 60 hours a week instead of you having to do it yourself. And then you can play a little bit more of the alpha as well. All right, silver. Silver had a nice week, up about, 4% for the week. So we said that last week the floor was going to be, the support was going to be around 22. After that, down around 21. Never got down to 21, but it hit 22 almost to the dot and then shot up. So that was pretty nice. The way we played that was we purchased some more PSLV, and this is just kind of to keep our monkey brain busy. We've just been trading this thing. We may do the same here. This may be a longer hold here, but you're basically buying physical silver, out of a warehouse from Sprott. And SIL is another way to play it. This is a silver miner ETF. Although it says silver miner, but Wheaton Precious Metals, the royalty company, has a big share of this. So it's not completely just silver miners, but it is a leveraged way to play silver, and one that you can do in your retirement accounts pretty easily. SILJ, the junior silver miner ETF, we've been trading this one as well. And we got a position, we're talking about it for weeks. Hopefully it got down to $8. It did. Our limit order hit. And shot up to 825 so far. If silver found its bottom in $22 and is going to run up to 24, 25, 26, which is kind of the next resistance levels, then this one will do quite well, and we'll probably trade out of it. We'll see. Copper's up 4%. That's a nice change. Copper's up 4% for the week. It shot through the 200 moving average and settled above all the moving averages in the daily on Friday, which was pretty cool. And yeah, I like that one a lot. The way we're playing this is COPX is the Copper Miners ETF, just a beta way to play copper. They pay a little dividend from all the companies paying their dividends, but we're just buying this one and accumulating it, have been for over a year now, or almost a year. And this is just going to be our beta play on copper. If there's a recession, this is probably going to get washed out a little bit, but we want to start accumulating this now if we think copper is going to do well in the next half a decade or so. COPJ, an even more leveraged way to play this. We got a limit order a week before last, 1725. It got down as low as 1650, but we missed that one. Yeah, COPJ. So this is essentially like GDX and GDXJ, except with copper. Arizona Metals fell out of bed and then stood right up. So it is up, I think, a couple pennies for the week, but basically got down into the 120s. We missed that tick, anyways, had we caught it, we probably would have bought. Now we want to see some kind of leveling action. We thought 150 was the floor, but it looks like it's not. Maybe we'll get a little rolling over and a bounce, and then we can make an entry, another entry into Arizona Metals. Uranium closed the week at 102. We believe that right now 100 is the new floor. So we drew in this white line right here. We think that 100 is the new floor. That actually does line up with some back support back here when it gapped down. So we think that 100 is the new floor now, and basically with these funds, we're just going to want to wait for the technicals to kind of iron themselves out, and then, if you're looking to get more into uranium, you can find an entry. SRUUF is pretty much flat for the week. No pounds added to the Sprott Physical Uranium Trust, is trading right now at an 8% discount. Not bad. No pounds added. Don't need them, but love this fund a lot. So right now, you can get $25 worth of uranium for only $23. So you got yourself a bit of a deal there. Not bad. And did we sell any? No, we sold a little bit the week before last to buy Origin and Glencore. Cameco, this one's kind of interesting. So they had their earnings call, which was less than stellar. And basically, we've learned that the two 800-pound gorillas are actually buying some of this stuff off the spot market. When miners are buying uranium so that they can sell it, that's not good. Although it's very good if you own uranium. But we have a nice little double bottom here in Cameco. So we got out of this thing way too soon. We got into it when they did the Westinghouse deal and then sold out, I don't know, 6 months later for a 40% move. Should have just held on to the thing. But anyhow, nice little double bottom right here. If you're looking for an entry into this, doesn't look too bad to me. I mean, the technicals are pretty stretched right here. Would like to see the RSI just tick up a tiny bit. But I don't know, this looks pretty textbook. I mean, the one part that has me concerned here is there's a reversal bar to the downside on Friday. So maybe like a limit order around like 41.75, something like that. You might be able to catch it a little bit cheaper. Because Kazatomprom, don't really see any entries into this, although maybe we do have a retracement here. Let's see, you guys can probably already see this at this point. Yeah, it's kind of a little bit, maybe around that 50 moving average, like 42 bucks, something like that. It doesn't really look like a strong buy. Let's see, RSI middle of the road, MACD. Yeah, no, I think I'm just drawing lines. All right, URA, you'll notice that these uranium stocks are kind of all following the same pattern, shot up and then down. We're going to probably, the next bump up, we're probably going to get to the point of no concern on this fund. Same thing with URNM. We are almost there with URNM as far as being past the point of concern, but not quite. I think the new floor for this one is going to be around 50 bucks. And see, that lines right back up with this November 2021 high. So I think this is probably around there's some major support right here around $51, $52, which is about where we're at now. Technical's got to get a little bit more sold though, I think. So ideally for this uranium sector, I think it would be ideal if the price just flatlined for the next month or two at 100 bucks. And then that would kind of spur the next move forward. That would bring all these technicals back down to a buying point. You don't necessarily just want to see something just shoot off to the races like that because it's unsustainable and they always correct. URNJ, like this one a lot. We're not going to be buying anymore. We're happy with our position. Got a nice little double bottom here in URNJ. So if you don't have anything, this might not be a terrible time to get in, but still would like to see these technicals get a little bit more washed out. UROY, looks like the bear flag is continuing. Maybe this isn't going to be a bear flag. I mean, maybe it's just going to go all the way back down. But love this company a lot. We're going to be in this one for the duration. We haven't sold a single bit, but yeah, like Uranium Royalty Corporation, probably one of our favorites other than UEC. UEC, I just drew this just before I pressed record. I'm not sure if this is a bull pennant or not. We'll have to see how this irons out. But if it is, then before these 2 points converge, we'll get an answer to the up or downside. But if it is a pennant, then we'll know here one way or the other in about a month or so. Boss Energy. Same kind of pattern, just looking like it's establishing a little baseline right here. We'll see how this one works out. We only made one purchase around the Rural Boot Camp shortly afterwards and just been hanging on ever since. But we think of the juniors that we got, Boss and Uranium Energy Corporation are probably going to do the best. Crude oil, this one was exciting. We are up 2% for the week. We crossed above the 200-day moving average. That is good. Just got to break through the 400 moving average and we will be off to the races. Hopefully next week we can get above $80, although we do have a fair amount of resistance right around where we are right now. So that would suggest that it's probably going to move down a little bit next week, but we really like that it's above the 200 moving average right now and it closed above that. Because now that's going to be a major level of support. XLE, our favorite oil, ETF with the biggest holdings being Exxon and Chevron in that order. This one shot above the 200 moving average, super good. Looks like it formed a bear flag right there and then broke out. So like XLE a lot, don't see any purchases right now. Exxon Mobil, same kind of thing. Super happy with our position on this one. Looks like this one's actually, maybe I can draw this if you guys don't see it, but you see that. And then kind of a flag pattern here, right? And one down here, something like that. Usually patterns like this will break out to the upside, so we'll see. Blackstone Minerals, one of our favorite dividend plays. They have another dividend coming up that we're talking about, which is probably creating this selling. The ex-dividend date was February 15th. The payout date is the 23rd, so that's going to be Friday of next week. And so we might get a little bit more selling. We still got our limit order in here for 15 bucks. We're going to get one more purchase in. Hopefully it reaches 15. We were staring at this before the market closed on Friday, and we almost bought. I think we just have a lot of Blackstone, and I think we're just being cheap. But if you don't have any Blackstone and you're an American and you like to play the oil sector and especially in a royalty play, this company is pretty cool. It is a limited partnership, so there's some restrictions on that, and at least in our account, they don't automatically reinvest the dividends, so you got to keep on top of that. You know, if you're not taking this, if you're not retired and taking it as cash, then you need to manually go in and buy those dividends. And so, you know, when you get paid on that, then log into your account and rebuy the dividends. All right, natural gas continues to get flushed out, down about 10% this week. You know, what, like Dave was saying in our interview this last week, $2 seems to be a pretty good baseline of when we've hit the bottom. So we're even below $2 a little bit, like right around that white line. But you can see that when it does get below that, it doesn't tend to stay there very long. So hopefully natural gas will reverse, and Devon and Equitable should be awesome recipients of that, being that they're in the gas industry. Devon, we still got our limit order in here. We put it for $40.80 just because we kind of dissected it down, and that seemed to be a good level, better than 41. Don't know if it'll get there or not. Hit the 50 moving average. Technicals are getting a little bit high, so we might have a reversal reversal coming, but it doesn't look like it. Look like it's going to bust through. Equitable, we had a limit order in down here for, I think it was $31.84. Wow, that's a weird amount. I must have really gotten into the weeds on this one as far as finding an entry point. But it got down to about 32, and so it just never hit. But yeah, we'd like to establish more of a position here over the next year or so in Equitable. All right, and coal. Coal closed the week. Thermal coal closed at 122. We're going to start looking at entries into this probably around March, so we got another month or month and a half. Met coal closed the week at 316. We believe our entry point is going to be around 250, probably in another 4 or 5 months. We'll see. Here's the coal ETF that we're anxiously awaiting. We'd love to see more volume come into this. I mean, share price right here is $23, and on Friday, they had volume of only 1.8 thousand shares. So not a whole lot of volume. We got to get more people buying into this and buying into the fund, and then we can establish some type of technical entry into this ETF. But I think this will be a real easy beta way to play coal. Glencore, we had a limit order hit week before last at $10, and now we have another one in here for $9.50. We don't know if it'll get there, but it's just lining up with a lot of back support back here around $9.50. And hopefully that one does hit. Like the dividends a lot. Bitcoin's up to 51,000. Actually, there is kind of a decent amount of resistance where it's at now. Support is going to be around 48,000, somewhere in that range. But yeah, we'll see. Platinum, it was a deal. We didn't fire on it simply because after talking with Rick, Russia is is clearing their books of platinum to pay for the war. But you know, if you didn't have any position in platinum, this was a way you could play it. PPLT, the Aberdeen Physical Platinum shares. One right back there. Palladium still below $1,000. It got into the 800s last week, which was pretty impressive. Here's a fund where you could bet on it. PALL, the Aberdeen Physical Palladium shares. Don't see any entries into these right now. The way we're playing this is the SPPP, and that's just a Sprott Physical Platinum and Palladium Trust. BHP, okay, this one is pretty exciting. Again, thanks again to the guys that hooked me up with putting these charts on top of each other. We always knew that there was a correlation between copper and BHP, but we couldn't prove it until now. The show's going to get a lot better now that we can overlay charts like this. And if this is what you guys were talking about, Kingfisher and CO2, let me know. If there's another way of doing this that might even be better, let me know, and maybe we can zoom and screen share and you can show me what you know. But this white line here is copper, and this chart in the background is BHP. And a second grader can see that they're pretty well correlated. It's kind of interesting. So what this means is if you can predict what copper is going to do, then you're probably able to predict what BHP is going to do. So that's kind of cool. Pretty cool. We made a purchase in BHP that was week before last, but there's still some buys right here. I mean, it's just hitting right in this 400 and this 200 moving average. This company pays great dividends, like it a lot, part of the core portfolio. Rio, we said last week that, you know, Rio's probably a buy. Anyways, we didn't buy it. We had one back here months ago. And I'd like to see this get down and kind of settle on the 200 moving average. That would be the ideal entry point for us. TLT, with yields going up, TLT value is going down. As soon as the Fed starts cutting interest rates, this fund should do quite well. We think that they're probably going to cut rates maybe around to 3.5 or so, or maybe 4%. And when that happens, this will go up to 116 or 120. So we'll see how that works out. This is, you know, we knew placing this bet that this bet was going to be 18 to 36 months, and that still seems to be true. All right, SSR Mining. We brought this one up last week, and yeah, this was a real bummer. They had a tailings dam, a heap leach failure, and so this is what it looks like. Right here, you can see this was a big, right up here was a big tailings heap leach pond, so to speak. So they just dump a whole bunch of dirt in there that's rich in whatever metal they're trying to leach out of there, and gold, and then they basically drain it and use cyanide to pull out and extract the gold. And that broke. 9 people are unaccounted for, presumed dead. 4 guys are sitting in jail right now. Not good for the company. Just super sad. You know, mining is dangerous and risky, and this is an example of that. Okay, so that's what happened with the stock. Someone asked about Petrobras. Okay, so this company is highly dependent upon what they're doing is they're mining, they're pulling oil out of the ground, or out of the ocean actually. So they have to drill down through 1,000 meters of salt to get down to the oil that they're extracting out of there. Now the challenge that comes with this is not only are they going down 1,000 meters, which is what is that, 0.6 of a mile, or for Americans, that's 10 football fields, right, in depth. Not only do they have to drill through that salt, but that salt is moving. So you have this salt that's constantly shifting and moving, and then you have this pipe going down through there that's pulling this stuff out of the ground, but it's working, and they're doing it, and they're paying amazing dividends. Let me go to their dividends here, and you guys can see. I mean, pretty amazing dividends. They pay quarterly. So in 2019, 1.2, 2020, 3.7, 2021, 20.37, and 2022, 59%. Now, Rick talked about this one in his classroom. I'd highly recommend that. There's a link down in the show notes below to go to the Rural Classroom. And his last Q&A, he talked about this one, and you can check it out there. Yeah, he's not too sure that the dividends are sustainable. And looking at that page right there, it doesn't look like they are. He said he would rather see them pay less dividends and keep that as cash to be able to deploy it somewhere else, or in case of an emergency, like maybe this this drilling offshore doesn't work out as well as they thought it would. Now, as far as an entry point into Petrobras, I'm bringing out the monthly here, and you can see that we have a lot of resistance right around where we are now. So see that green line right there? Here, I'll just put a white line in for you so you can see it better. But there's quite a bit of resistance right where we are now. RSI stochastic on the monthly, RSI stochastic MACD on the weekly, they're all high. Look on the daily, they're all high. This is when I was taught to sell, not to buy. And I'm not saying if you have Petrobras to sell it, that's not what I'm saying at all. But basically what I'm saying is, like, I don't see this as a buy at all. It could continue to go up, but I'd like to see some kind of correction. I'd like to see these technicals get down a little bit. And then I'd be much more comfortable with an entry. But yeah, looks like an amazing company. If you like oil and gas, and you think that migratory salt that they have to drill through is going to keep on working, then there you go. All right, and Keystone, want to know about Equinox Gold. Okay, big market cap. I think it was over $1 billion. Is that right? Let's see. Yep, 1.44 billion. So you guys can do market orders. All right, as far as a technical entry here, okay, RSI is kind of middle of the road, MACD is middle of the road, stochastic is high, so that's not great. As far as back support, we see kind of some immediate back support around $4.30, and then maybe after that around just north of $4. So maybe start with your limit orders around like 430, and then back down here, maybe $4, something like that might be able to get you an entry into there. By the time it gets down there, this RSI and these indicators should be a little bit lower. Maybe it'll hit along the 400 moving average and kind of obey that, but yeah, that's what I would do. And Bill and Sergio want to know about Sibanye-Stillwater. We were in this one briefly, and then we sold out of it, I think for a 7 or 8% profit or something like that. But we asked Rick about this one. Our concern is that it's in South Africa. There's a lot of political risk in South Africa, and there is, how can I put it? As far as their energy, their electricity, it's pretty intermittent. This was just a little too risky for our blood. So we got out. Even if this was down when we learned of that, we would have sold it. It just happened to be up on the day that we talked to him, and so we made a little money. But yeah, this was just a little too risky for us. But if you think that platinum and palladium are historically cheap right now, which we do, why not bet on a miner that's pulling them out of the ground, right? Political risk, be damned. As far as an entry here, kind of around where we are now. See, we have a bit of a double bottom right here. So this ticked back here in November, and it just hit on there on Tuesday of this week, and then shot up. Maybe a limit order around like $4.20, something like that. Hopefully it'll come back down for a double bottom and then bounce up. But the tick was on Tuesday, if you could catch it. Since you're watching this on Sunday, that ship has sailed. But you can always put in a limit order right there. If you really believe in this company, maybe do your first limit order at 440 and then like 420 after that. Okay. And Daryl wants to know about Encore Energy. We exited our position in this. I think we're up 40% or something like that. I guess we sold a little bit too early, judging by this. As far as an entry, so this is kind of like the other uranium stocks, right? It went up and then down. And right here now, it's hitting on the 50 moving average. RSI is still a little too high for us. MACD needs to get sold off a little bit more. Stochastic is in the toilet. And it is coming up on a double bottom, but take a look at this reversal bar on Friday to the downside. You know, it just looks like it's going to keep going down. But I mean, the double bottom, nah, our bias is to the downside for next week, but maybe a limit order back here, like 375, something like that, that would line up with this. We'll just have to see a little bit more action and see what this looks like, but would like to see these technicals get a little bit more washed out. And Beck wants to know about golden metal resources. Okay, this is over the counter, so this must have just opened up and there's like almost no volume. So we're going to go to the London Stock Exchange. Now, this market cap here is only 11 million, and look at how much is closely held. All right, so you may be able to buy this and you might not be able to sell it. All right, this is going to be one of those that if you believe in the narrative, you're going to hold it for a while. As far as a technical entry here, we don't have a whole lot of data because this goes back less than a year when it IPO'd. Maybe down around here, like 13.1, 13.2, that would kind of line up with this back support right here. And then maybe the next one would be back down here, like 11 cents. And then the next one back down here around 9. That's kind of how you got to look at these when there's almost no action. You know, there's very little movement and volume, and you know, it's such a small market cap and very little is held by the general public. Okay, so that's what we see there. And Boy wants to know about Empress royalties. Okay, this one was one of the ones featured in the Rural Royalty and Streaming Bootcamp. We have his next bootcamp coming up. I'm super excited about that one. There's a link down in the show notes if you guys want to check it out. It's going to be on prospect generators, some of the most profitable bets in this sector. As far as an entry here, I see one around 27.5. And then the next one down here is going to be like 25.5. Those are probably your immediate ones. Remember, this is just a new royalty and streaming company, and it it's only been around a few years, and it did move above the 200 moving average. But remember, their market cap is pretty small, 34 million Canadian. 25% of this is closely held. In other words, not available to us. But if you want to get a entry into this, I would be looking at the back support right around those levels I mentioned, around 27.5, and then back down here around 25 and 25.5. Would look to be fairly safe ones. And then maybe the next one down here, 23, 19, and then back down here at 16. So if you just set those limit orders, they'll eventually probably hit, especially if gold gets hit. All righty, and Kat wants to know about Atom Natural Resource Fund. I hadn't heard about this one, and I was kind of surprised. Let me go to their website here. Here you can see they've been around since 1929. They pay a dividend. Here's some of the top holdings. Exxon makes up 18.5%. Chevron makes up 12.5%. Pretty incredible. I mean, those are the two that you want if you're going to be in oil. And this is the industry weightings that they've got: equipment and services, exploration, production, oil and gas, refining, storage, chemicals, and then construction and metals. So pretty cool fund. I'm surprised I'd never heard of it. But anyways, okay, so as far as an entry into this, we see, let me go back. We'll start out on the monthly here. And probably right around there. Yeah. Okay. We'll call it 1950, 1975, somewhere in that range. It looks like it's got a lot of support. These are the weekly. Technicals are a little bit. And then on the daily. Okay. Yeah. So I'd say the first one's coming up on the 200 moving average here. So that's a lot of resistance that it's got to bust through. Looks like it's going to roll over and come down. And then you might be able to catch it at like 20 bucks, maybe 1975. And then the next level down here is going to be around, what is that, 1925, something like that. So maybe limit orders 20, 1975, 1925. And then if you get lucky, it may come down all the way in here into the 18s. All right. And someone asked about Comstock, and I can't remember who it was. I think it was in the live chat. But pretty interesting here. So the white line is essentially where we are now. There is quite a bit of back support where we are now. The one thing I'd have to say about this is I'd like to see a double bottom, right? I'd like to see this. See how it goes up and comes down, kind of like we have in uranium going on right now. I'd like to see a double bottom like that. And the thing with this is it may never come, you know, and if that's the case, then you missed out on it. But it just gives you a lot more confirmation that the stock is going to go up. You know, without that double bottom, you're just kind of throwing money in there and you don't really have a lot of confirmation that it's going to do anything. The technicals do look like it's on the rise though. So this may be it, but I would say an order around where we are now looks pretty good. All right. Well, I hope you guys got something out of that. If you are enjoying the show, support the show. There's a link down below where you can donate. Thank you for always being here. If you like this software trading view, then you can try it out free for 30 days. There's a link in the pinned comment below. It's an affiliate link. I want to grow my finances just like you. And if you use that link, then you kick a little bit back to your favorite podcast. Thank you for tuning in. Hit the like and subscribe and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.